Aequitas investments. Now, Siddhartha started with an AUM of around about 10 crores in 2013, and 10 years later in 23, the AUM stands tall of more than 4,700 crores and growing. Now, today we'll be going to do a deep dive into equities, top PMS and AIF performance in 23. We have Siddhartha with us to take the conversation forward. Thank you so much for your time, Siddhartha.
Good afternoon, Kshitij, and good to be on the show.
Thank you so much for your time. And, in fact, for the month of December, impressive December month returns, both in terms of PMS and AIF. Please take us through the numbers as well, Siddhartha. We would like to know more about the strategies, more about the performance of the fund, and we'll definitely, track the 1 year performance later in the show as well.
Yeah, Kshitij. So, see, December actually, we don't kind of tend to look at monthly performances. To be honest with you, we are very long-term investors. As you are aware, our average holding period is more than 5 years. So, in fact, for the month of December, we actually kind of underperformed the small cap index and the Nifty. Because one, we have created a little bit of cash on our portfolios, and the market is red hot right now. So we've taken a very cautious stand.
Absolutely.
So the 1 month performance, again, as I said, it's not something that we focus on. But yes, for the month of December, we've actually underperformed, and we're happy about the fact, to be honest with you.
Right. No, absolutely the right time to book profits. That is something, that's what the clever fund managers would do. They know when to make that exit or, book profits. So that is something which goes in your kitty as well. So nothing to downgrade in that sense, but definitely a positive signs for the shareholders and for the investors as well. Now, if you look at the 1 year performance, Siddhartha, Aequitas, in fact, Aequitas India Opportunity Product PMS rose more than 90%, almost sort of doubled investors' wealth in the year 23, and we know why, because you know when to take that right calls, when to take that money out, and when to put the money. So take us through the numbers and what led to the performance as well.
No, I think to be honest with you, last year was fantastic as far as small and mid caps were concerned. The small cap index itself rose by nearly 50%, right? And we've grown by 91% over the last 1 year as far as our PMS is concerned. So good time, the economy is booming. We had taken a call way back in 2020 that we see a massive bull run as far as the small cap index is concerned, and that to a large extent is paying off. So last 1 year, good earnings growth, economic outlook has been fantastic.
Right.
And yes, but at the same time, valuations right now have become, are not at all attractive. They're on the higher side. So while the economy continues to remain strong, the economy continues to remain buoyant, the thing that scares us is valuations and a little bit of madness that is happening in the SME space. So let me put it this way, that we'll be kind of, cautious going forward.
Right. Caution is the word coming for Siddhartha. Now, if we talk about the AIF performance, Aequitas equity scheme 1 in the long-only category 3 fund also delivered on about 90% returns, which outperformed, in fact, other schemes in the same category. Take us through that performance as well, and what is the nature or the scope of the scheme?
Yeah, I think, again, our AIF, close to 90% returns over the last 1 year. The strategy as far as both our PMS and AIF remains the same, which is a multi-bagger approach to investing. And we are beneficiaries of living in the right country at the right time under a good leader. All the economic policies have been very, very favorable. Good time for businesses. Tax collections have been buoyant. The UPI payment has been a big success, which has dramatically reduced, the black money within the system. So good times again, as I said, and we were beneficiaries of that, Kshitij.
Absolutely. And nothing taking away from that fact. Now, when I started the show, I also pointed out that how you started back in 2013 and now we are in 23. So decade of wealth creation, we have seen, in fact, the AUM has grown in multi-bagger way. So how much money investors would have made, let's say, if they've invested 50 lakh in 2013 in the PMS portfolio?
So Kshitij, a crore invested with us in 2013 is today 25 crores. This is net to the clients. Our portfolios have compounded at 35% CAGR over the last 11 years. We complete 11 years in a week's time. So our portfolios have compounded at 35% CAGR over an 11-year period. These are net returns to our clients. And are these sustainable? Definitely not. Correct. But we'll try and do our best as far as trying to outperform the markets over the next 8 to 10 years again.
Right. No, absolutely. And we wish you all the very best with that. And, 1 crore turning into 25 crores. Yes. Handsome feat and long feat by whatever margin that you want to measure it. So, all hands to you, all the cap and the, colors to you on that fact. Now,
thank you, Kshitij.
Now that, you've known to spot multibaggers and, your portfolio shows that. And one of the reasons why you've been able to turn that 1 CR to 25 CR. Now, if I may ask, how to hunt for the multibaggers at a time when markets are trading at record highs? I think that is one of the pertinent questions with probably retail investors or somebody who's watching the live stream right now would want to understand. As you rightly pointed out that at this point in time, valuations are a little on the edge, time to remain cautious. But how to pick stocks even though markets might be trading at record highs?
I think, to be honest with you, very difficult to spot multibagger in this market. Okay. The valuations are very, very stretched. So that's also one of the reasons why a couple of months back we've stopped accepting new flows into our PMS and AIF.
Okay.
So right now we are closed for fresh subscriptions in any matter whatsoever. So yes, I would say that the time to find multi-baggers is when there's blood on the street, not when there is mania on the street. So I don't see a lot of opportunities as far as finding multi-baggers at these levels is concerned.
Honest word coming in from Siddhartha, and you don't mince your words by any chance. And if it is black, then black. If it is white, you don't. You try to stick to the facts, which is why you make it a great fund manager. Now, let me take the conversation towards broader outlook. Impressive numbers both on the PMS as well as AIF front. Now, after blockbuster 23, how are you looking at 24, which will be an eventful one? We have budget, we have election outcome, we have possible rate reversal, and geopolitical concerns continue to linger. Maybe this time it's Red Sea, or tomorrow we don't know how things would turn out.
Yeah. So I think all the good news, Kshitij, is already captured into the stock markets, whether it is the government, incumbent government coming back to power. Budget is an annual phenomenon, so not much I would read into it. Geopolitical, I don't think so. The risk premiums for geopolitical risks are captured in the current market. So you could have geopolitical issues globally, and that could have an impact as far as businesses are concerned. So as I said, 2024 is going to be a year of caution as far as I'm concerned.
24 year of caution, yes. And before we move forward, I would request each and everyone who's watching the live stream right now, in case they have any questions regarding the fund, if they have any questions regarding the scheme, AIF or PMS scheme, please do let us know. We'll try and take that up with Siddhartha right here on this live stream. Now, Siddhartha, your PMS is slightly tilted towards the smaller, the mid-cap segment, which are looking overheated. And you already mentioned the fact that you've already taken some money from the table. So are you planning any rejig in the new year, in the 24?
So we'd wait for corrections, and if we find corrections and if we find good opportunities, then we'll redeploy the money back into the market. So we'll act as and when as the markets and the economic situations unfold. But definitely, again, as I said, we don't rejig our portfolio very, very frequently. Our average holding period is more than 5 years. So we continue to like what we own. The only reason we've created cash is because we are a little worried about as far as the broader markets is concerned. Nothing else.
Right. Now, the next big event or the next event to talk about from market perspective would be budget or the vote on account. Yes, not much expected, but any wishes that you have from the finance minister?
I think everybody has a wish list as far as but
Yes, but that's why I'm not touching the expectation. I'm just
you
touching
know.
the wish list at this point in time.
Uh, so I think what the markets would be looking for is fiscal consolidation. To be honest with you, that's the big
Mhm.
number, and then the focus, which last year you saw the focus on infrastructure spends. You'd probably see. So I expect a very good budget. To be honest with you, the government finances are in
Okay.
very good shape, right?
Mhm.
Tax collections have been higher than expected. So the big number that people are going to look for is going to be fiscal consolidation. And if
Okay.
that comes through, I think it's good for the markets.
Right. Fiscal consolidation is something to watch out for. Now, Manas in the chat box has written to us which sectors you are bullish on for the year. Before I take that question, I would also add in mine, which is aligned to this question because, if you look at the portfolio, so capital goods, metal and mining, as well as construction are the three sectors which, in which you have more than 10% weightage allocation in the portfolio. So how are you looking at these sectors in 24 as well?
So Kshitij, in all these sectors, we've been invested for more than 5 years now. Right. And we expect these sectors to continue to do well for the next 4 to 5 years.
Okay.
As I said, the government impetus is on, uh, you know, building infrastructure in the country on the government capex. So we continue to remain on these bullish on these sectors. Are we going to add new stocks in these sectors? Definitely not, because the valuations are not favorable.
Right. Now, in a broader perspective, you said that this is going to be the year of caution. So, what is your call on the markets in terms of how you are looking at things to sort of align probably in the second half of 2024? Because first half will be slightly more eventful. Now, in the second half, do you see any consolidation and then probably stock market picking up?
Very difficult to take a call, right? Second half, before second half comes in, you have monsoons coming in. We've had nearly 5 years of normal monsoons, and yet the water table, you're seeing concerns as far as the water table is concerned in the country. So I'd just be a little cautious. Let me put it this way: we will see how the situation evolves and act accordingly. Very difficult to predict a forecast as to what is going to happen in the next 12 months. I wish I could do that, but no. What the markets tell me right now is that there's a lot of euphoria. Stocks have gone up quite a bit. The small cap index is up 50% in the last 6 months. I've never seen anything like this before. And it tells me that it is time to be cautious. That's it. Nothing beyond that. And as and when the situation unfolds, we will take a call on that.
Absolutely. Time to remain cautious. And there's another space which you are cautious on is the IPO space, in the SME IPO space, in fact, to be more precise. Now, the IPO space has picked up momentum, especially in the second half of 23, and the momentum sort of carried on in the year 24 as well. But if you look at the trend, there are more SME IPOs coming in versus the main board one. So how to evaluate IPO, and do you see some building in this category?
I think it's a lottery space, to be honest with you. People are playing the lottery, and I see a lot of skeletons coming out from that segment going forward. But till now, right now, people are having, enjoying the party, and it's only when, as Buffett says, the tide goes down, we'll come to know who's swimming naked. So, yeah. One more thing, Kshitij, that is kind of worrying to me is the domestic liquidity right now. And domestic liquidity has been in deficit for nearly two plus weeks. And this is after a very, very long time that you have a sustained period of domestic liquidity deficit. So that's an area of concern. A lot of the domestic liquidity, we peaked at 12 lakh crores somewhere in March 2021. And a lot of that domestic liquidity led to the rise in stock markets.
Okay.
And I'll be a little cautious, particularly if you look at the bank results, you're realizing that the credit deposit ratios have kind of, for the private banks, is more than 90% for a lot of them. So they will have to start increasing deposit rates, and that could have an impact as far as the stock market is concerned.
Right. So do you see some impact coming in the SIP way as well? Because we have more than 17,000 crores coming in on a monthly basis. Could that money also move?
As I said, SIP numbers have been fairly steady for the last 5 to 6, 7 years. and we've barely
True.
seen a correction as far as the stock market is concerned in the last 5-6 years. COVID was just a 1 month down month. So let's see. Again, no real comments as far as that segment is concerned.
Right. Well, on that note, thank you so much for your time, Siddhartha. And that's all for now. But do stay logged into ETMarkets live stream for more investment and trading ideas. Thank you so much for your time. I wish you all the very best.
Thank you. Thanks, Shitesh. Bye-bye, guys.
Thanks.